The new earnings limits for 2022 are in, and I want to share with you 6 little known facts that you need to be aware of so you can make sure that you don't make a mistake here that could cost you some money. But before we get there, subscribe to my channel, hit the notifications bell. I have over 30 years of experience in this business. We specialize in Social Security and the transition into retirement. Talk a lot with our clients, and I want to share some of those conversations with you so you don't make some of the mistakes that others could be making. So let me share with you why this is so important, and I'll give you an illustration of this by sharing with you a story of a client of mine a number of years ago who called me up and said, listen, I want to take the grandkids to Disney. Seemed like a pretty innocent, nice thing to do for the family, right? Create a whole bunch of memories, go down to Disney. Well, Bobby at the time was under full retirement age. She was not yet 66 years old. And she was collecting Social Security. And she was also working part-time. And what she had calculated sort of, on the back of a napkin was that she needed to generate another $8,000 of income, and calculated how many hours that was going to be so that she could pay for and fund this marvelous trip that she was going to have with the grandkids. So when she called me up, I then called her accountant and we took a look at some of the numbers. And as it turned out, it was the perfect storm for Bobby because she hit just the wrong thresholds at just the wrong time and with just the amount of withholdings. The reality was she was only going to keep about of the $8,000, about 22%, or about $1,600. So unfortunately, my advice to Bobby was, doesn't make a lot of sense to put in those extra hours. We need to find another source to fund the trip. But that's why this is so important to understand this, particularly if you're going to be taking Social Security before full retirement age. So let's get right to it. Let me share with you that chart. As you can see here, if you are under full retirement age, you can earn up to $19,560. But for every dollar over that, and what they say here is for every $2 over the limit, $1 is withheld from the benefit. As important, in the calendar year full retirement age is attained, that number changes to $51,960. And then above that number, for every $3 over that number, $1 is withheld from your benefit. So this is important to understand. This is where the Bobby story came into account, where she hit that threshold number not only for Social Security, for her income tax and withholdings, and therefore for her it didn't make any sense to go about and generate that extra income. So here are the 6 items you really need to be aware of, and maybe the questions you should be asking so you can understand it from your own particular perspective. So the first question is, particularly if you're married and you're each earning money, whose income are they looking at? Is it the joint household income or the individual? So this is a little tricky because the taxation of benefits really has to deal with joint filing if you are a couple. But with regards to whether or not they're going to withhold your individual benefit, they look at your individual earnings. So it's important to recognize the difference. The second item you need to be aware of is, what is the definition of income? So all income is not created equally. Let me take you to my chart for a moment. As you can see here, income that does not count would include pension payments, annuity payments, IRA distributions, dividends, interest income, and capital gains. So interest that does count really is what they call earned income, which we would categorize it either as employment income or net earnings from self-employment. So now that we know what income is and how they gauge whether or not they're going to withhold it, the third item to understand is the withholdings. Where does it go? Does it go poof, magically into the air and then it disappears? Well, the answer is no. Once you reach full retirement age, that they start to prorate bringing back that money to you, but it takes a number of years to get it back to you. So you don't lose it, but it does come back to you over time. Now, I have 3 more items that I think that you need to be aware of, but before I get there, if you're interested in a broader picture, in my recent book, Don't Outlive Your Money in Retirement, you can go to our banner here. The second chapter is devoted just to Social Security because we really specialize in the area of Social Security. And you can find out what many of the questions and answers are so that you can have some more clarity in terms of which of the 567 different Social Security strategies you need to claim. So the next question is in regards to whether or not your spouse or kids are taking money off of your work record. And if you've hit the earnings limits and monies have been withheld, will it impact your spouse or kids' benefits? And the answer is yes. But here's an interesting twist to this. How about if you had been married and your ex is eligible for divorced benefits? Will his or her benefits be impacted because your benefit is being withheld or you've hit a threshold? So the interesting answer is here, no. As long as you meet the criteria, and just say basically you had been married for 10 years and it's been at least a couple of years and you're 62 years old, then you can claim your benefit and it doesn't really matter what happens. It doesn't really matter and it doesn't impact your benefit, the other ex's, no matter how many times he or she had been married. There is no impact. The 5th item really is about disclosure. Should I tell Social Security if I'm going to be over the limit and I know it? The answer is yes. Because what will happen maybe a year, 2, 3, even 4 years later, they will catch it. And then they'll send you communications that will ask you to give back some of that money that you may have already spent, and it may become a real problem. So be upfront with them and let's do it honestly, because it will come back to bite you, and that could be a really confusing and messy situation to be in. And here's the last little known fact. We'll call it the mulligan. Yes, I am a golfer and I love using the terminology. You can call it the redo if you like. But if after, let's say, watching this video, you find out that you took the Social Security at the wrong time, and let's say you've done it within the past 12 months, no longer, just within the past 12 months, you can go back in and withdraw your application. You give back your benefits, but you can do a redo, a mulligan if you like. If you think that you made the wrong choice and you want to redo your strategy at some point later on. For more information, you can go to our playlist.